Hi guys, welcome back to another lecture. So today we are at lecture 23 of the series. So if you're very new to the channel, welcome aboard, but what I would suggest is that you start from lesson 1. It makes the most sense, and don't deny yourself a learning opportunity, as I always say. I have covered a lot to this point. If it's your first time with Market Profile, don't worry, you've found your home, you've found your place. Because here, all I ever talk about is Market Profile. I have covered other aspects of trading. If you look through the channel, you'd see I covered everything around my own trading concepts, everything you can imagine. I've had this channel for 11 years, I think. I've covered a lot in trading. So none of this is new to me. But if it's new to you, then everyone's got to start somewhere. And I think you're in the right place. I always say it's a really small channel. YouTube doesn't promote channels like this because we are providing just value. I'm not necessarily doing what most YouTubers do. I'm not trying to be an influencer. I'm really just trying to present some value, and it's a mutual exchange. I appreciate you supporting the channel first and foremost. And again, if, like I said, don't deny yourself a learning opportunity, please go back to lesson 1 and start from there. I will teach you everything you need to know about Market Profile. Once again, I get a lot of questions on comments. I get questions in my DM on the Discord server, link in the description below. So join the Discord if you want to learn a little bit more about what I do here, and also be able to get access to a little bit more in-depth stuff. I talk about a lot of stuff on the Discord. Just check it out. If you're wondering, I get a lot of comments about this. If you're wondering where to get access to a TPO chart, I think the TPO chart that I developed is the best on the marketplace. I'm pretty sure there might be something out there that's better, but I developed it for MetaTrader 4 at the time. It's not available for MetaTrader 5 just because it's incredibly difficult to do something like this for MT5, so it's not available. But it is available for MetaTrader 4. MetaTrader 4 is widely provided by most brokers. You don't have to trade on it, you can trade on it. At the end of the day, if you're trading in the right direction, you're not going to have a problem. So bottom line, it doesn't matter what platform you want to trade with, you can still have this on a demo and use it. It's absolutely perfect. I designed it in the same way CQG designed their TPO chart. It was that principle that I had in mind. So it does a lot of the stuff that a CQG TPO would do. But you can segment, and I've shown you in previous lessons how to do that. So you can segment hourly profiles, 4 hourly profiles. You can do weekly, you can do daily, different rotations. You know, you can customize it a little bit. It's quite flexible, robust TPO chart. Right. If you want access to it, link in the description below, Discord server, DM me. It does come at a cost, but I can assure you TPO is expensive. What I provide it to you for is literally just to keep the lights on the server. So it's inexpensive, it's a lifetime offer. It is what it is, right? I can't give you for free. I used to. There are a hell of a lot of people who got this for free in the beginning. Now I don't give it for free. Love to. I'm all about charity. I help traders a lot, but I think really and truly it's for the money you're going to spend, for what you're going to generate. It doesn't make any sense that you don't invest in this. Like, if you want to be a professional, you've got to. This TPO is used by all the professionals, right? Whether they work in banks or whatever, you're going to see a Market Profile on their stuff. Right? I see people taking the dim walk road and then trying to deal with TPO, well, let's say volume profile or volume cluster type chart. This is no good to you in isolation. I've seen the YouTubers, I've seen the influencers saying how they made so much money with the volume profile. It's bollocks. You can't use that volume cluster data in isolation. In fact, volume cluster data, I argue, is completely useless if you can't see the individual points at which the market accumulate and distribute. It's just useless. And if you're using that, I guarantee you're not probably getting a high degree of success. And on this lecture, I don't always do this, but on this lecture I'm going to show you what I've done, just teaching you what I'm teaching you, taking the same trades I was telling you to take, or the same trades I'm trying to give you an understanding of how to do them on your own. all of it. I'm going to show you the same trades right here so you can see that the trades, I did them in exactly the way I'm telling you to do them. So I'm not bullshitting you. That's the first thing. I'm also going to show you how you can potentially take this information and reinterpret it on a candlestick chart so you can see the difference of how difficult it could be to do these kind of trades and executions on a candlestick chart without putting yourself at some grave disadvantage. Right? It's not that candlestick charts don't work, it's open, high, low, close data. So you're looking at data on a wider, with a wider concept in mind, or a wider field of view. So it's not really always easy to work an execution. You gotta do twice the lifting, right, in terms of what you can see. And I'm gonna show you that, give you the difference as well. So this lecture is gonna center around some of the stuff we spoke about and some of the opportunities that you could have been in, right, if you just listening to me. What I always say to everyone is that just listen to me. I'm trying to help you. That's it. I've got no other agenda. Like, I don't make a lot of money from YouTube. My business is trading. I do this for a living. I don't do anything else. I say this almost every lecture. So there are a lot of people who they do other things, right? It's not like they do other things, like they have a job and they're doing a YouTube on trading. It's nuts. If you're going to be a trader, trading is a profession. You know, everyone, well, you know, I got to have a job. I hear this all the time. No, you don't. You need to learn how to trade properly and make it into a business and a profession, and then trading becomes your job. Right? Not all jobs are easy. You're an entrepreneur. You're making your own way. That's a good thing. So again, I know it's not a popular perspective, but I can't see how you could do something so complex as trading and hold down a 9-to-5 job. You're probably abusing your job, because I always say you can only be good at trading or good at your job if you spend 90% of your time at your job. You're going to be really good at your job, so you should stick with your job. If you spend 20% of your time on trading, or 10%, you're going to be bad at trading. You're never going to be good at it. You're only going to be good at your job. So you need to spend 90% of your time with trading and 10% with your job. You can see where I'm going with this. You're not going to have a job before long, right? So that's the point I'm trying to make, right? Is that it's that industry that doesn't allow you to expand anywhere else. It's me or nothing. It's like it's jealous girlfriend, right? It's me or nothing. There's not going to be any side babes or anything like that. It's just me and that's it. It's a wife situation, right? You got to marry the trading, right? You can't be a side chick, right? It's not going to work. Point in case. Anyway, enough of the wisecracks. Now, look, let's get down to business, right? So we spoke about cable. As you all know, I'm a big cable trader. I don't know how many times I'm going to say that. Massive cable trader. So we've seen the moves over the past couple of days, and we're going to look at some of them with the concepts that I put in front of you. So this is a daily profile, and if anybody doesn't remember, I think it's a good time to rehash. Let's go back to the weekly profile. So this is a weekly profile. By weekly profile, we simply mean, if we break this down, the profile is every week. Right? So this is a week, this is another week, and this is another week. And what have we said as we were going through this profile? So there were lots of points in this journey where I'm sure a lot of you were doubtful that we were going to break out and run the stops, because we kept getting these runs at highs and closes downwards on the week. So you can see that consistently. And that's part of the liquidity concept, right? Liquidity first trifecta, liquidity, which is the first thing we look for. And if we've forgotten, I would say go back to the previous lectures and go over them again, right? But we've spoken about this before, is that you need to know where the hidden orders are going to come alive. And what do we mean by hidden orders? They're stops. Stops are not visible to market participants. Only intermediaries that you give the information have it, and they can sell it to other people. And if I'm looking to get access to a lot of an asset at a specific price, then I have to ask the other side and say, where are all the stops? I've got X amount of money I'm willing to buy or sell at a specific price. How much do you have there? Let's say, for example, you're a market maker and some large entity turns up and says, I need 100 million base position in cable, and I need it at the lowest price you can give me. Right, I need you to find sellers for me who are going to sell me 100 million notional. Go wherever, don't give a rat's ass where you're going to find it. Just find it for me because I want it. So what am I going to do? I'm going to look at my book, see everyone who wants to sell at that individual's price or better, and then I'm going to start to make a market. So, and what does that mean? So that's stop losses. That is stop losses, sell stops. So if someone comes to me 100 million notional, say for example, let's just take the S period low into the stack here, right? And I'm looking for the best price at the S period low. I'm saying to the market maker, well, I want to buy at 140, 134, I want to buy 100 million notional on cable. But if you can get me a price at 135.80, I'll take it, and I'll take that price all the way down to 130.60, I'll take everything. All right, cool. You want 100 million spread out, 134 all the way down to 133.50 as an example. Let's go. How many sell stops do I have at 134? Okay, that maybe gets the party 20 million notional. Let's take them. I'm gonna bid that price down so freaking fast to 134, it will be like a flash crash, right? And I get 20 million. And then I go, well, I've got 20 million, I need 80 million more, but I've got another 50 million sitting at 133.85. So I'm gonna go there and grab 50 million. And I've got the last 20 million or the last 30 million sitting at 133.50. So I'm gonna go down there and clear the lot. So now I've got all my price, and that's what a stop run is, basically. Is that I've gone under the S period low and taken out everything I could find, including the 134 handle that the trader wanted. Now he's locked in for 100 million notional, right? I got him 20 before, I got him 30, that took him a 50, I got him 50, that took him a 70, and I get the rest of the 30 million at the lowest possible price. So now he's got an average price, right? Which spans across 134 and 133.50, which might put him an average of about 133.80 on all his position. So he's gotten a better price as an average of his entire order, and that's why we get this. But the only person who could have known that it was 100 million notional underneath the S period low was the market maker or the intermediary, right? And that information has been sold to the trader. I think we're getting the point. Yep, I think we're getting the point. So that's why liquidity is important, right? Otherwise it wouldn't be important, right? Who would care, right? You can just buy anything anyway, right? But it's because people want value, they want the most affordable price, and that's why that happens. And that's why market profile is good for us, because one of the things we can always see is where was actual volume, which is in the form of stacks, right? So we've got a bid stack here, right? So this was actual volume, right? So traders were trading here actively in a direction. And we can see the market comes in there, draws on the bid stack and stops and accesses everything under the S period low and the stack, and then runs higher, right? That's good market making. The traders were able to get the best price. This is a very liquid market currencies. So they were able to get the best possible price, and they found it where the orders were going to be hidden, like the stops are going to be, right? And that's where they looked. What market profile does for us, it shows us these levels, but it also shows us where value low is, where value high is, right? So it tells us that the market is going to trade into these fair prices, but it's going to preference lower fair prices to go in the long direction, and it's going to preference higher fair prices to go in the short direction. Really, really simple, right? It's not a difficult concept. That's my first trifecta. Liquidity, where is it, right? In the real sense of the word. All right, so let's take another stab at this. So we can see at this point, that was the first D period high, that there were going to be buy stops at a high. Same reasons. You want to get short, I need to get short 100 million notional. Who's going to buy them from me? The buyers are going to have their buy stops up here for sure. It's upper high because they're already short, right? So they're going to have their stops at the high. Now if I split this rotation, right, it's not in line, but never mind. You can actually see that we went up there, drew, and in K period we had this massive drop, right? That was the sell stops initially triggered and everyone's short. So now new stops are above the B period high, right? So depending on how much short activity I want to generate, I might have to come back up here and access the stops on that place too. I don't know, but we'll see. But for now, my destination has to be selling into the bid stacks where there was prior passive orders, limit orders, ones we can actually see. But the problem with limit orders is that people pull and put them all the time, so they're not reliable. However, if the market has moved off a limit order area, right, and we can tell because the second trifecta is active and that's volume, there's a lot of volume there. We can tell because the profile has already showed us that. You don't need level 2. You don't need, book maps. You don't need any of that stuff. All you need is to say where the volume clustered in a previous profile. That's likely going to be a decent level of support for sure. So we know that it's at a high, a value high, right? So these are some of the nuances, right? And this is something I'll normally reserve for people who are maybe private clients or people who want to get into real depth, right? They want to build some complex strategies, and maybe they're techies who want to put together some algorithms, and they really want a good handle on the statistical benchmarks that we look at as traders, right? So key, we rolled down, and I'm thinking, well, this was an active area, so if passive orders, limit orders were here and they triggered and they sent the market higher, then it's likely that people do think this price area is relevant for whatever reasons, which I don't care to know. They think this price area is relevant, so we should find it as a support level. And if it's a support level, the biggest and professional traders are likely going to stick their stops underneath the lows. So it's also going to be a place where people can fall victim to that. Realistically, the smart traders, right, the ones who have access to market profile, will have their stops underneath value low, right? That's the 133.40 handle, 133.40 handle, correct? Right, that's it. That's where they're going to have their stops, because that's the best place, which means that ideally they should look for a trade into this minor stack at this low here. You can see it, that's volume, right? So you can see the TPOs extending outwards. And that is a much more advantageous position to trade from. But if you're an early bird, you're going to have to take on more risk, right? And this is the stuff that you can't teach you, right? This is the stuff no one can teach you. It comes from experience. Anyway, so now we know where the new stops are. So let's lock this back in. So we know that the market's gone up, traded into the stack, and it rallied out of that. Where is the rally going to take you? Let's split the rotation. So now we'll bring into another concept called a value trade. What's a value trade? 70% of where the distribution is centered in a prior profile is value. If the market starts to trade in the direction from value low in the direction of value high, there's a 70% chance it's going to travel the whole way. So the moment we hit the bid stack and we opened at value low, there was a higher chance that across the week we were going to go to value high. That's a 92 pip run. And I'm going to show you that's how I'm able to make the trades I make, and that's how I'm able to produce the profits I produce, is because I'm focused primarily on these concepts. I'm not interested in, I know what they teach these days, whatever people are I'm not interested in, not because it's bad, it's just because I kind of know that, well, it might have its edges, but it's not really of interest to me. I'm looking for alpha. I want good stuff. My handle, I nicknamed myself Greedy Trader, not because I'm greedy, it's because I'm the most risk averse trader there is, and I want a sure bet. I'm greedy in that sense. I'm greedy with my risk. I'm greedy with those things. It was a parody, more or less, from the Gordon Gekko universe. Greed is good, right? But not in the sense that you think of it as, right? And that's the whole premise about calling myself Greedy Trader, because I don't have time for the shenanigans, right? I just want the good positions. I want the great stuff, and if they're not happening, I'm not interested. So I'm not going to look at too many things, right? I'm not that one strategy to the next, and that's not me. There might have been a phase where I was curious, right? It's like being a teenager, right? And then you're curious about certain things, and you want to know a lot of stuff. That's fine, but as a grown-up that I am in a trading game, 17 years, almost 17 years plus, I'm not really about that anymore, right? I've cut my teeth. And for those of you who followed my other videos, followed me closely on Discord or watching, you know I sell option premium. It's not, I don't just do this kind of trading, but I want all of you to succeed. And I know you can't succeed. Maybe you don't start with option premium. I've got, private clients who've mentored who've started with option premiums and it's gone great. And if you wanted to learn that, I'm all ears. But I know everyone has to start from somewhere. So what I'm trying to do with these lectures is boost your confidence so you can know you got this. No matter what you have this under control, right? It's nothing to be worried about. And a lot of people are just concerned they're going to lose a ton of money. You won't. If you use your head and you get the right tools, right? The market profile's on offer for virtually nothing. Right, I'm offering it to you guys for virtually nothing, lifetime, so you can become the trader you hoped you wanted to be. Up to you, anyway. So, moving on. So you can see that draw. So we go through value, we did that, right? And guess where we're dropping into? We're dropping into volume, right? And we're using that as the fulcrum to go higher. And where do we go? We draw on the stops at W period, and watch that. So again, let's split this rotation back into the next week. So we come from W period, where do we go down to? Right, we go back into fair price, right, which is here. You can see the point of control. We traded in the fair price and rally out of that. Obviously, it was almost the entire length of value low again, so we were doing multiple value trades through the week. These are all opportunities. Now, personally, I would have expected this to draw into the A period low, but I've said this before. If you go to the last lecture, and I think the lecture before that, I talk about how difficult it is to get under value lows when the value perception is moving higher. Again, another nuance. Right, I'm teaching you some really good stuff in this lecture today. This I would normally reserve for private clients because these are the things, right, that give you that additional edge, right, that confidence. So, for example, you're a swing trader. I know a lot of people swing trade. If you're a swing trader, these things I'm talking about, pay attention because these are going to help you in your swing trading efforts, right? So those of you who want to hold down a 9 to 5 at the same time you want to trade, you are going to need to get to grips with all of this stuff for sure. I think it's really difficult being a long-term trader. I think it's really hard. You know, when you trade short-term, you have less risk, right? You got this defined point you need to get in, you've got this defined point you need to get out, and you're risking so little pips in order to get there, right? So, you know, I'll give you an example. Someone with a 20k account could easily be risking, you know, $200 and could potentially make $800, $600 on a single trade, right? On an intraday basis, and they're done. They don't have to stay in the market. They don't have to be greedy. Make $600-800 in a day. Like in some parts of the world, that's what people make in a month. Right, you make it in a day. Obviously, you average it out across the week. You might not make $600-800, but that might end up being, you know, at the end of the week, that could easily have been, on average, let's say $1,600. Right, when you start to discount your losing trades and your winning trades and so on, in a week that could be $1,600 if you're using the correct concepts that I teach you here as well, mind you. You know, with market profile, you don't have to come off market profile to do that. I'm going to show you, of course. Even in future lectures, we'll come back to that. I've covered this in a prior lecture, segmenting your profiles into 1 hour with 5-minute rotations. We spoke about this, right? So you can still play the game in the same way, but there's less risk on it. When you're a long swing trader, Shay, I think you need balls of steel. That's what I think. I think you need balls of steel to be a swing trader, because when you lose, every single time you lose big. I've never seen a swing trader that loses small, because to hold a swing position, you know, whilst you could risk $200 on a intraday basis, you can't do that on a swing position. You're looking at risking 1k minimum, right? No matter the account size. So you got a 20k account, right? And you see that disappear by 1k in one position in a go, and there's no way to recover that. You don't have a strategy that allows you to hedge out or to, you know, cancel out that trade or get flat or scratch the trade, as we call it in the business. You can't scratch a trade on a swing trade. You've got to sit in for the next level, and that could maybe come 2-3 days down the line. So you've got a couple of days to stew on the loss. You ought to know what I'm talking about, right? You will get it. I'm not, you know what I'm talking about, swing traders, right? Intraday traders, you know what I'm talking about too. Most problem with intraday traders is they just can't trade. That's it. And if they can fix that problem, they're going to outperform swing traders. Anyway, for another day. And it's something that's easily provable, but nevertheless. So again, when we saw that move lower, that value trade move, right, we can clearly see that we've got a new high now at the W period. Now, guess what? I might go there to get the stops up there too, right? If I really want to be aggressive as a market maker today, I might go there. But then we get this move up an I period coming off volume. We didn't take out the A period low, and then we start to rally the next day. So if you were still in that short position hoping to get out, then you should be thinking about break even, because you would have been likely in that short position from about the 8 period break, right? And that's what you would have been looking at for your trade. So you've already made about 90 pips to the downside against the week. Right, your risk might have been sitting above the high, 65, 32, or possibly even 50 or 45. You could have been anywhere above this level, right? The YZX period hooks. So from that point, you're down here, you've done about 100 pips and the market is dancing, and then you come down here, it looks like it's going to post. We get a big move up at P period, and then we close lower. So you should be looking to cover the trade. And I'll show you examples of how I do it, and you'll see some of those moves, right, on the daily profile, because that's where I like to sit a lot of the time. But the weekly profiles are where they get a reference point, right? With assets like cable, you find the pippage risk on the week is now almost equal to the pippage risk on the day, right? The volatility is tighter, right? So it's not like we used to get in cable where the weekly volatility is really high, because you're getting these points in a daily profile where we're getting these massive trend days, right, which overextends, because this is a 4-hour rotation in I. We got a really big move, but that accounted for at least 50% of the week's move happening in 4 hours, right? And that's by midweek. So this market's already overextended by the time we're getting into, it's not even midweek, it's early week, right? Because the F period GH is like a Monday. So this was a Tuesday. So 2 days into the week, we're already pushing quite serious range into value low. So this recovery here wasn't a surprise, right? But let's say you don't have that level of experience, whatever, right? You can see that we rallied and we went up to the high and we fell out in Y period. Well, hey, that's another opportunity. If you were managing your moves right, you would have been cutting your trades. Like this would have been a stellar, right? We did the high, you take profit, you get short A period, we did the low, we rallied here at I period. You can check the volume, second trifecta, right? If the volume looks good on your I period, you can do it via segmentation, or you can use in a basic candlestick chart. Not complicated. If it looks like it's a bit testy, cover your trade and wait for us to break lower and take a long instead, right? So you could easily have gotten out of this trade, but let's say you're stubborn and you stuck with it despite the evidence that it might rally. Then break even the trade, take the risk off the table. So that way, if it comes against you, you're out for even. And again, I'll show you examples of that. We go to the high, we draw on the stops Y period and we break. You can see the aggressiveness of the break. That tells you that we've run stops, buy stops. Again, we want to get in. We're looking at 50% of the leg, 20, 30%, anywhere around those levels is good, right? So we break, we want a recovery, which came in C period, and then we want to get short. Stops can go above the Y period high, that's 50 ticks. Now, if we break, our expectation is they're going to be stops below the I period low and the A period low. So we should be aiming to get there. That's about 127, 130, just before the bid stack. And if you're ambitious, you can aim for the bid stack, right? I don't like to scale out in that way, where I take 50% out of the trade, or I don't like that, or maybe pay for the trade by taking maybe 20, 25% out of the trade. No. So essentially just covering your risk. I don't like to do that. Instead, I'll hold, get out altogether, or just be brave and go for the bid stack and break even the trade and watch it to see what it does. So there's a level of intuition, right? But that's the only discretion you're going to apply, right? And that should put you in a good position. Okay, so we've done the left side of the chart, right? I like to do the right side of the chart too. So we did the left side of the chart, and we got the idea that there was a lot of selling going on. So there was a lot of attempt to deliver the price lower, but never under the bid stack, right? And then we had this big week where we had this massive rally, right? That became evident from the E period, right? So again, you can, if you look very closely, you will see us run the stops below the U period low. And what did I say a few minutes ago? Value low. This, according to the profile, now this would have been a weekly bar candlestick. Value was in the middle. There is nothing you're going to do with a candlestick chart that will tell you that you've got 70% of the distribution sitting here. What you see in a candlestick is a bar. So this will be a high close, a low open. So this will be a full Marabuzo, right? So bullish candlestick, bullish white, but that's all you got. Open, close. You have no clue where value is, right? And I know though there's a bid stack here and value lows here. What is the chance you're going to take out value low on a Marabuzo? It is virtually nil, right? Virtually zero, right? Not to mention all the other volume that was piling on down here, right? So second trifecta is a massive play. So all we're looking for is we're defended by the second trifecta. So all we're looking for is first trifecta to occur in a favorable price area. So this D period move on a Monday and that huge rally end of day, E period, right? So those last 4 hours of a Monday was your kill. That we're probably going to get a really big breakout, right? This would have been a really difficult trade to get into, right? If you weren't observant enough to see the D period rally and you want to get long at that point with stops under value low, then, and that would have been just a straight value trade. I wouldn't have even been looking for an extension, but my gut would have been telling me that this thing is probably going to take out the Y period high to run stops. Now, if you join the Discord server, right, to put an end to this conversation, you would see that I was a big proponent of cable going to 137.50 first level and then 142 the next level before declining. But from what I'm saying, as soon as we went up through the Y period high, immediately I said to my guys that we are running stops now on the week. So there's a good chance of a cool off, and if you split the last week, you can see what did we do. We traded the W period high for stops, and look at the aggressive move in J period back into the prior value. Typically, with such a big Marabuzo on the week, I would expect that we're going to trade into the minor bid stack. So with this kind of run, we're probably going to take out this and trade to the midpoint of value, midpoint of the entire candle, which will put us right about here. And then I would expect a reaction. So again, on the rally, your value high really didn't matter where you entered at this point. This was perfect to take a risk on. 47 pips, 50 ticks, straight down. That's a 3-1 against the... You get where I'm coming from, guys. I hope we're saying what's going on here, right? And that's why the profile's superior, is because I got these statistical benchmarks that, like, who the hell would want to short a weekly move, right? Put this in a perspective. Who the hell would want to make a short against the week? No one's going to want to do that, because that would have looked like a really huge candlestick, right? Like, when you look at it on a candlestick chart, you'd be like, this thing can only go up. And that's where they get you. That is where they get you. No one's going to want to short against this, but that was the trade, right? And that took us all the way down here, back to value low, and now we're struggling, right? We're building volume. My bet is that we're starting now, we're back into the trading range of the entire market profiles collectively. So cumulative profiles are now telling us that, imagine this was like a weekly candlestick chart. It's now telling us that we're back within the trading range of the initial short sellers, right? So the trading block. So anyone who has managed to stay with this trade is now going to get confidence that this thing's going to go. So there is going to be an abundance of short positions, for sure. Because on this break, the people who were short here and have held it and they overstayed their welcome are now in trouble. So they might have held on to this trade, no stops, like literally no stops. They would have ridden this stuff, no protection, and then hoping that it came back, and like the market rewards bad habits sometimes, and then we get this nice pushback, and then they're like, okay, this thing's gonna stay. And then we rebound and we close back above the liquidity, and then you're thinking, ooh, what's coming? But remember, we got no liquidity, right? So this is just in reference to this, but this was the real draw. And now we're back within this range. Like, let's keep going. So my guess is we're gonna attack the bid stack, right? So this is right side of the chart. Look, we're gonna attack the bid stack because we've got second trifecta in play. The only way I'll change that opinion is if we recover second trifecta, then we are definitely going for the J period high, which is where the new stops are going to be. Not difficult. But for now, I'll be looking for major center open to position short where I can. But sometimes the market doesn't always allow you that. It doesn't allow you to make this kind of analysis and then go in the direction of the trade, because like I said, we could flip the volume at the base and then rally. Look where we are. We're value low. We've traded, we've hit that. We attempted to take out a K period low, which would confirm the downside. We didn't. It's not happened yet. So, bottom line is that we can end up rallying. And if we do end up rallying, then we know that the value high is going to be difficult to play, but there's a lot of pips between where we are now and value high. So I wouldn't just jump in. Point in case. Now let's have a look and see what's happening on a daily, and that's how you start to work your way down to where you'd want to be. And if we split this, we will definitely see we've had a strong Chicago session, right? And you can see that from the volume. Let me open it. So this is level 1, and this was the 3 p.m. 1700 European time, and that's the profile for 1700 European time. Bingo. So my dominant position will be long, right? And then you just go with that. That's what your option is. My dominant position will be long, and that could be long on an intraday basis, back through value high, maybe even up to this value. I don't know, right? Bottom line is I can clearly see that we ran the stops on the daily. We've retested the level and the market doesn't like it. We've got new stops at the R period low. We could come and get them too. And if we did, then I'll expect that rather than a rally, we might just end up cascading, because it's confirmed by the weekly chart. If we take out the low, which is the W period low, then K period is done. That's a sitter of a trade. So people who like to jump on trades will get on those. I don't like being short in the hole. Either I saw it or I didn't. Or if I'm trading it intraday, that's all it will be. It'll be an intraday trade in the hole, and it won't look that way because it will be trading most likely from a high price going lower, as opposed to lower, 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 coming from a low price going lower. I like to trade like that. It doesn't make sense to me. So I've never had that mindset. Right? I'm not picking tops and bottoms, but I'm not trading in a hole. So my mantra is don't get short in a hole. Private clients will tell me that. That's one of the first things I say to them and almost everyone I work with learns to trade by being short in a hole. Breakout trading, all of these things bring those bad habits. It's not that breakout trades are bad. You just got to know what kind of breakout trade you're looking at. And I've spoken about initial balance, right? Which is the best kind of breakout trade to do, but that's all about timing. Right, so that means adjusting the time of your A period start to where you want to trade the breakout. I'll give you a good example. Take today. I'm a breakout trader. I like to trade Asia. This was an A period start. Over the balance is a breakout trade up. Right, below the balance is a breakout trade below. You have to consider the distance of the initial balance. That's another nuance that I'm teaching you. Again, if the initial balance is tight, then higher volatility will ride it. So it's only tradable in Asia and Europe. When it's this tight in the US, you have to recalibrate your balance to the US Open, which would have been 1600, which is really low and it's short in the hole. You're not going to trade a breakout short in a hole. So there's a lot of things that can stop you from bad behavior if you just know them intuitively, right? So anyway, my point is that on a moves like this, you want to be long until you get confirmation for otherwise. Hopefully that made sense. And I know it was very packed and this is very advanced, right? I've kind of But we're lecture 23. I would have expected that you will be practicing. And if you haven't got the TPO chart, what are you doing? What are you doing? Just go to the Discord description below. Just message me. You'll have it within a day. And it will be on, and you start to make money, and you start to have fun. All right, now coming to that interesting bit that I promised you that I'm going to get to, right? And this is just so that we start to build an understanding of how I'm looking at it. So I'm going to show you what's going on and how I approach some of these trades. Right, so here's my deal map, right? This has been a challenging week. So you can see that I've had profitable trades. That's why the deal map is green. I've configured it for green. So it's profitable trades, but lots of break evens, right? And you can see that I've had to be chopping and changing. And that's okay because I'm still banking though. These are fairly sizable positions, right? And they're all illustrated. So for example, let's take a look at this one here, right? So this was, again, that rally that we saw. This was a New York, I think this was the NFP. And we had this big rally to the upside, right? And you can see that 1 p.m. we came down. We didn't quite draw on stops. We'd already done that earlier. But here we came down, we drew, and then we started to close higher. So like I always say, in line with the profile, you want to wait for us to get to the value low sections of the bar, right? And that will be visible on your market profile segmented, and then that's where you want to get long. Obviously this trade went all the way to the high, right? So this is the high of the 1 hourly frame, so on the daily profile, right? So that was also high of day, and then sold off, right? And you can see these were major center opens. This was London. So because of where I'm in the world right now, I can't trade London. I have to wake up too early and I don't want to do that. I'm a little bit too old for that now. Here we can see the volume from the NASDAQ, which is the one I can catch now, right? So I prefer to trade that one, but as you can see overnight, it did pretty well. And then it was down in Europe, right? So by the time I was coming into the next New York Open, I had to cover the trade because it was apparent to me that we're going lower, right? That hopefully makes sense. So I'm trading time trifecta, session to session. That's the point of the time trifecta. I'm going session to session, right? So I don't want to trade anything that's not a major center open. So you can see there was a London traders that essentially ran the stops at a higher day and they control the market at that point. And then you can see us drop into the next level, which was London again. It was 10 o'clock when we drew on the stops at the low and then closed high. Unfortunately, it's 10 o'clock, it's outside of my time trifecta and it's Europe. So I didn't have that. But then we come into the next one. So let's roll this forward, right? And you can see, again, that we drew on the stops. I've got it all marked out, right, as well. Right, so I do it on both sides. Do it on the TPO because that's where I'm going to build all my ideas for execution and make sure things are set up the way they are. It's how I'm going to control the trade as it's developing. I'm going to do it all on the profile and I'm just going to use this for execution and then put benchmarks there in case I need to do something like this, show you guys, or have a chat with my daughter who's also now becoming quite a trader. So if I wanted to do all these things, I can do them, right? And that's how I would do it. Again, you can see the deal map. Again, where do I want to get in? So I see the big move. As soon as we start getting back into the line where that's where I want to get long. In this case, I was a little bit late, so I got long on the high, right? Again, we pushed up into the next session, which was the NASDAQ. This was a later entry for me. It was coming off Chicago. So it's slightly outside of my time trifecta because that was 4 p.m. and it was a really late entry because of how we took the Chicago, right? I needed a confirmation. That said, I'm still working off the Chicago time trifecta, which is down here, major center opens. And here we push and we go higher, right? Where do we go? We take the internal high initially, and then the next NASDAQ we push downwards. So now, again, I'm a little bit late, right? Because I wasn't doing an intraday execution. I was going for for carryover the next day. You can see we moved even lower on the next day. I didn't cover the trade at a low. It pulled up a little bit, and what do we get? More volume, not quite a draw in liquidity, but we're now moving higher. But we do get a draw on the internal low of day prior day. So that's of interest to me. So now I'm be long, right? Looking for decent protection below a reasonable low, right? So I've got a position on this long. You just can't see it because my positions are turned off. But I will update you depending. You will see the deal map and you will see how I manage this out. So it's not rocket science, right? Not rocket science, right? Let me get out of this for a second, right? Now I'm going to show you, do a screenshot of the trades so we can get the same picture, right? So you can see those trades in real time. I rarely do this. I just hate doing this, but for your sake, I'm going to do it, right? So you can see these are the deals, and you can see that all the timestamps, not all of them but a cable, but you can see that I've done a few on gold as well, right? And this is the total P&L for all of those trades. So again, the gold trade was the one I covered in the last lecture, and you can see that here. All of you would have noticed that gold came down for another drawn stops and it happened to tap me out, right? You can all see that, but you can see that despite I was on the next trade and that netted me quite a handsome sum, right? And I've come out of that trade because I didn't want to stay in it. And as you can see, this is all the trades up until the 9th of July, right? Which was the last trade I had to cover, which you've just seen, right? So you can see that it was a rough time with the cable trades, right? Pushing a bit of size, so the gold trade sort of made up for that. The only really good cable trade we got was on the 30th of June, which we've discussed. Point in case, guys. So just to make the point home that I'm not bullshitting you. You can do this. Like I'm not that much of a genius. I'm not that smart. I like to think that when I think of my Vedic astrology charts, I like to think those charts are really good for me as a investor, trader. I was generally going to have a lot of success. I've got really good intellect in that direction. But that said, some of you have exactly the same, and some of you can change those karmas, right? Bottom line. Anyway, moving on. I've just thought I'd drop that in there so we can get a picture and we can build around those trades. We also had a look. We spoke about gold, right? So some of the complications that came with gold. So the trade that I was talking about was, so we split these rotations, so that was the losing gold trade. And then let's talk about the losers. Nothing wrong with talking about the losers. So we had that initial draw on the 8-period low, so there was a gap here to fill. Again, if you look at my previous lectures, we talk a lot about gaps. I think I'm going to do a lecture a lot about gaps. It's such a small topic that I can pretty much cover it in no time, right? But gaps, right? So we filled the gap on gold, and then we rallied off the stops at the low. We can easily see that. I don't even need to put a line there anymore. And we went to the highs. We ran the stops at a high over the volume. You can also see there was a stack here that was going to hold us down. So if it's not very clear for you, I'll put some lines in here. So you can see we ran into the stack and sold off, right? And where did we go? We went into the bid stack here and then rallied. So my trade was taking the hour period break up, hold, and I was going long. Sadly, stops below the low. You can witness how those stops got taken, right? And that was my losing trade. It happens. You're not going to win these 100% of the time. I'd love to tell you that's the case, but good luck, right? If that's what you want, then you're in the wrong channel. Please go to, I don't want to call anyone's name, but go to some of those channels. They're always winning trades. They're making the biscuit, and of course, you're funding them. Fantastic. Go to those channels. Here, it's about making trading real. It's a business, it's a way of life, it's about getting off the 9 to 5 and not looking at trading as your side chick and trying to become a professional. Respect trading. It can be so mad, right? People don't respect trading. Trading is the hardest business you can ever do and you're ever going to do in your life. For me, it's harder than being a doctor. My dad was a surgeon, right? Point in case. And I think he couldn't do this. God bless his soul. He's passed on now. But I don't think he could do this. So bottom line is that this is hard stuff. So respect it. I don't care if you're a doctor, you're a lawyer, you're an accountant. If you want to be a trader, you've got to quit all that stuff and become a trader. Because it's going to rock you. It's going to put you in a space that you've never ever been in before. Right? So all that professional prowess, all that respect that you once got from your previous profession as a professional, knowing what you're doing in trading, you're just, some 18-year-old is pretty much going to make you look stupid. And that's what makes it hard as well for people to believe that people actually make money from this stuff, or people at the age of 19 could essentially, be driving a Lamborghini. Like, I'm not about that world, guaranteed. I'm a bit more stoic than that, but Saturn's strong in my chart. So I'm a lot more about the hard work, right? But there are people who are just about the good stuff. They're about they're all about the desiring effects. Right? So it's all good. It is all good, right? What floats your boat, right? But the bottom line is that money's been made here, and if this is not for you, it's not for you. You can always continue doing what you're doing, and I hope that brings you a lot of success and luck. Again, if you're a trader, be a trader. That's the point. So you can see the loss, and then you can see, of course, we rallied out of that, and that's the trade that you're witnessing, right? So you can see that strong rally, and that's all the trades up on today's the 10th of July. That was the 9th of July cover on gold, right? I missed the absolute high, which is what I was aiming for. Again, I was thinking we're going to push through this offer stack and go here, so I was a little bit higher to take profits, so I had to cut it early. Right, well, I had to cut it when it was back in because it was clear to me we'd hit the offer stack. It made no sense, so that trade was liquidated. That's it, guys. So I'm showing you the trade, so you can see that it all matches up with what I just showed you. Right? It doesn't. I'm not. Like I said, it's not bullshitting. You can do this. Anyway, moving on. Right, so hopefully that made sense reviewing gold. There are other assets that we've tried to make calls on that haven't really gone to plan. Crude oil's been a bit wild, right? We've become close. Right? Some calls have worked out, some haven't, but I haven't traded the crude oil trades. I'm not a big crude oil trader, but the thing with a profile is you can trade any market, right? But you will have to build the nuance of that market. Crude oil doesn't respect volume trifectas as much. Definitely respects liquidity more. But it also respects liquidity at certain prices. You may have to start looking into commitment of traders, right? If you go to the Discord, I have a whole section on COT where I'm always putting up COT charts. If you're interested in getting that deep dive into where position traders are, biggest money managers, leverage funds, if you want to start understanding how actual positions are built in the market, then that's the way to go. But if you're trading something like crude, I would assume COT charts are going to be quite important. Is what it is. There's so many CTAs in the US that go primarily off COT charts. In fact, there's a really famous one. I have a podcast and I interviewed Jason Shapiro, really famous market wizards trader. And, for those of you who don't know, we had a long chat because I'm a market profile guy. He's equally a futures guy, maybe not so much market profile, but he's very much about COT, and I'm a lot about COT as well. So there was some synergy there, and it was a good conversation. If you go to my Discord server, you'll see I've got all the podcast interviews there. Again, description all in below. But that said, he's runs a multi-million dollar fund, right? And he still uses COT charts to do most of his positions. I think 1 year he made 13 trades, right, in the year. 13 trades in the year, all COT based. So bottom line is that if you're trading, and he's a commodity fund, right, so he's a commodity guy. So if you're trading commodities and stuff like that, you're going to find that this is going to be pretty handy, right? But equally, the one thing crude also respects is the value lows and value highs. It's very value driven. Of course, it's a commodity, right? Lots of swap deals get done at certain prices. And again, that information you can get in a COT chart, COT, is what it is. You can make use of it. Anyway, guys, thanks again for another. I hope you learned a lot in this lecture. I think I've really pushed the boat out. I gave you some really good scoops, stuff that I generally reserve for clients. I've told you some of that stuff. There's a lot more that I heard, guys. There's only so much I can put here. I'm about charity, but my job here is to teach you how to use market profile and use it effectively. If you want to start going into leverage strategy and understanding how I would do things and the best way to do things when it comes to multi-asset, then that's different. Even some of the trades I show you here, they don't make up the bulk of what I can do, or the range of stuff I can cover. But in this cycle, this trading cycle, when I'm doing a lot of these lectures, I'm kind of tempering things down a little bit just so I can have some time to do these lectures and some time with my trading. So, and also I'm spending a lot of time with my family, and you know, I'm in a wind down phase, especially this year. I've got a lot of things I want to do and think about, so I'm not trying to have trading dominate my life. So as a result, it's a good time to do these lectures, and which is why I've chosen this time. So if I'm choosing this time and I'm showing you these trades, these are largely for your benefit, but also I can pay my bills. Like, that's what goes without saying. So obviously I've had some good trades on the CFD side for sure. As you can see, I've got commodity side that I'm dealing. So some of them, you don't see the breadth of it, and some of them require complex strategies. There's even the stuff that I do for like my day to day. So this is more like my swing, the positions you're looking at, all my swing type positions I look at more to take across the day. It helps me balance myself, but I trade every day, and my intraday stuff, which is my bread and butter, I generally don't talk to anybody about that stuff at all, right? So unless you're a private client, you're not knowing anything about that, right? Because that is not your business. However, private clients do get that priority, so I will give them my playbook that they can bring to the table, which is solid stuff, right? We're talking years and years of back testing and data and teaching them how to build that understanding. So there's a lot of stuff I haven't covered here. Right? But I also have a professional trader program on YouTube, which is free, which covers a lot of things. But again, like I said, it doesn't cover those aspects that I've had to put years, blood, tears, and sweat into building. I ain't giving anybody that stuff, you know, for nothing. You know, I love you guys, but not that much. Anyway, guys, to my next video. Adios.